Good evening, all. Ira Epstein of Linn and Associates with your metal market wrap-up for Thursday, the 22nd of April, 2021, about 6:25 p.m. Central Time. You know, I do that time and the date, whether you know it or not, by memory. And sometimes I'll get it wrong, you know, try to do what I'm doing all the day long and you lose sight of where you're at. Well, the event of the day was that the White House, through different news outlets, let the cat out of the bag as to what the president's proposed, and that's the key word, proposed tax changes are. He wants to raise the top interest rate from 37% roughly to 39.6% and double the capital gains tax up to 39.6%. Making the numbers very simple, everything for the top earners are going to be taxed at nearly 40%. Will it pass? I'm going to go on record. No. It's what he proposes. That's great. It isn't going to fly in the Senate. It probably won't fly with all the Democrats. The radicals will love it. It's, you know, it make the rich pay for everything until you drive them out of the country, and then who's going to pay for their radical programs? You know. That's the reality of the situation. I come from that school. Not anti-anything, but logic. That is what I'm for. Logic. I'm against these other things that drive people out. I may not be right, but let's look at what happened in New York. I live in Chicago. You think people aren't leaving in droves? They're tired of being taxed. You know, they're going to Texas, they're going to Florida, they're going everywhere they can to avoid these crazy taxes. Now you want to take the capital gains there? And I am not sharing my politics. This is a financial update. I don't think 39.6 will fly, but that doesn't mean some number won't fly. And that's where the real issue is. What is the real number? So, the gold market did not fall apart on that. Stocks got hit, but if that's what a 40% tax is going to do, yeah, we'll get a correction maybe, but that's about it. So as I take a look at what the markets are doing in the gold, you know that I'm still looking for a challenge of the 18-week moving average of closes at 1789.10. That's the first resistance hurdle in the market. If we take a look at the day's action, you had a pullback and a bounce. Where's the market now? Well, you still have the pattern starting here, not here. Here was the first correction, but now you've got higher lows, higher highs. We don't know that that's a low. Why? I don't know how today's going to finish off. You can, and when I say today, we're already in Friday session. I don't know that you won't take out 1777.10. What I do know is I'm looking for the resistance in between where we're at now and that 1789 level. It doesn't tie in on the daily bar chart with any moving averages here. The 100-day is where it was about yesterday at the 1806 level. So where might that resistance be? It's still there. So on the weekly, you've got to, when you chart like I do, keep in the back of your mind 1789, bigger resistance on the daily where these two come together, the Bollinger Band and the 100-day, trend up, and you still have an embedded reading. I think the pros bought today. I think that's what they're looking for. If the red line closes under 79, I think they'll bail. In the gold-silver ratio, now I've got June gold versus May silver. I'm going to change it tomorrow to the July silver, so be ready for me to do that because I've already put July up here. Now, I'm a little early, and when I say a little, next week is when the big shift will happen because traders don't want to be long where they can get delivery of it. But I looked at the charts, and they're all worth putting up, and I noticed here that you have a market that if we go back a few days now, I want to take you as far back as I can to see if it embedded. Both numbers over 80, both over 80. Come on, give me Thursday. There it is. There's Thursday, both over 80, and now we're into the Friday trade. Got it? So you were embedded, but you're trying to lose it tonight. Therefore, is this market a buy while it's trying to lose it on a break? No. Let the market prove it can stay embedded. Why? It keeps failing at the upper Bollinger Band. So that's a sign that if I were long, I'd probably be telling myself, might be an area to lighten up right here. May not be able to get back up there at this juncture. If it stays embedded, then I think you got it, and you can go even higher than that. In the copper market, are we going to embed again? So as we can see, we can't count today, Friday, but we can go back to Thursday's action, both numbers over 80. If we go to Wednesday, not over 80. So you have a market that is overbought, coming up challenging that Bollinger Band area and stalling, but it could embed as early as next week. Okay. Am I still friendly on the chart? The chart is still bullish, but it is overbought. So I don't think you're getting a lot of new buying here, but I don't see any reason to be short. In the platinum, you now have a market with lower highs and higher lows right into what I call that line in the sand. And you've heard me say this over and over. Markets like to go to the 18-day moving average of closes and often go sideways against them. You don't have to believe me, but take a look what it did here when it decides another trend here. Not as long as these did. I can go back on the chart over and over and find these areas for you. It's an important moving average. And in that, the market now is neutral. You've got price over the 18-day average. The swing line has no trend. You got lower highs, higher lows, and momentum is flat. In the palladium market, you have a pattern here of higher lows, higher highs. What are the odds of the market staying over the upper Bollinger Band? 5% of the time. You think the pros aren't knocking the market back each time it gets there? They have been. You may not agree with that, but that's what Bollinger Bands do. That's the purpose of them. One of them is it tells you the market will stay within the band's 95%. My interpretation is you're going to have great trouble staying over the band for consecutive days. I've talked about it. 5 is really, if you use your rule of thumb and you go to chart after chart, tell me how many of them have closed. 5 in a row over that band. So I count each time it hits it. Is it hitting it fresh? Is it staying over it? And I come up with a game plan for you. If you haven't taken my enhanced Bollinger Band course on our website, go to www.iraepstein.com under the word education. It's all explained there. All right. So you have the embedded reading, which is still bullish. So I'm not bullish. I am bullish in thinking the pros are buying this market, because you have that reading. Until that closes under 79, I think that's what they'll do on each break, looking for the Bollinger Band to come. This is not like silver, which is losing that reading. I then take a look at what the dollar did. Now, I've mentioned to you that the dollar, I think, is now trying to find its way for support right at the 100-day average, but it's not in the bull camp. It has still got a lower high. I could argue it's got lower lows. This high today did not take out that high. And you have an embedded reading. When you have the embedded reading, this rules the day. Get it up and over 21 on a close, and I think you could make a challenge right here. But there's something else that happened. Take a look at the 18 versus the 200-day moving average. You got a bearish crossover. So the market's getting weighted down again. You could get bounces in the market. You can kill these trends, but you're going to have a heck of a trouble, a real heck now, turning what I think is the major trend and another crossover here that is bearish on this chart. You try to put that all together and you figure out what could happen in some of the cryptocurrencies. You're very overbought right here. You come down, you hit a goal, the 18-day average on the correction, and you're just back and forth. But if you don't believe there's importance to these Bollinger Bands, God bless you. There's no point in watching me. I'm Ira Epstein, and I do want to remind you about what my brokers do. You know, as much as I talk and do this, I hand-trained each of the brokers in my company. And they have been with me, the brokers that I've got, probably 25 years to 30 years apiece. And yeah, we brought in younger brokers, and then as all this happened, we had to let people go, and what we have is our real experienced brokers with us. You know, as everything changes, we'll change and be bringing people back one of these days. But to make a long story short, if you're the type of trader and you really don't want to place your own order, you want eyes and ears out there, my brokers will be that for you. If you want to follow the trade recommendations I do and you can't get up and follow everyone as I put them out, they will work with you and find a way for that to happen for you. There's many things that can be done, and no, these are not commissions that break the bank. I want to make that ultra clear, okay? Ultra clear. That is not what they're going to be. They're going to look at what you need. the amount of time they've got to put in, what you expect from them. You're directing it all, and then they'll work out a commission that you and they think fair. How do you get hold of them to talk to them about it? Call us at this number. You can go to our website, just clip in there on the free offerings you want a broker to talk to. We will have somebody get hold of you. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.